Breaking news this morning, economic news, brand new jobs numbers just out. You can see them behind me. In July, the U.S. added just 73,000 new jobs, below expectations, the unemployment rate at 4.2%. But the big news, really big news, major revisions for May and June, major downward revisions. Those months much worse than thought, really making them two of the weakest months since the pandemic. Let's get right to CNN's Zane Asher for the latest on this. What are you seeing, Zane?
John, I don't know what to say. I mean, this number is bad. You mentioned the downward revisions, but if you look at this number, 73,000 jobs added compared to 115,000 that was expected. And you have to remember that in order for us not to be in the danger zone in this economy, the economy should be chugging along at least 100,000 jobs every month. The fact that this is below that is significant. You have to go back to October last year to find a worse number. As you mentioned, the downward revisions are really problematic. We're talking about June being 14,000 instead of 147,000.
That's a huge discrepancy.
That is huge. And then you think about May coming in at 19,000. And a lot of the economists that I've been speaking to have been warning me that, look, when you start laying off the people whose very job it is to actually collect the data, that is likely at some point going to show up in the numbers. And the discrepancies is really what concerns me.
All right, folks, so we have some stunning breaking economic news. Donald Trump's economic disaster has officially hit, humiliating him and endangering the finances of the entire nation as a consequence of his disastrous economic policy. And we have to talk about. But before we do, if you end up liking this video and you want to support the channel, please be sure to hit the like, subscribe, and alert bells before you go. All right, friends, there's no way about it. These numbers are terrible, just objectively atrocious. Trump's economy is disastrous compared to the economy that he'd inherited from President Biden. For the second time, Donald Trump took a really good economy, not a perfect economy by any stretch, but a really good economy he'd inherited from his Democratic predecessor and drove it into the ground with disastrous fiscal and economic policy. So let's take a look at it, and we'll look at some of the reaction. And I should tell you, we're dealing with the serious stuff first. I'm going to give you an update about where the economy is at the moment based on these jobs reports, okay? And then a video that we will do, either the next video or the one after, we will look at the hilarious, the darkly comic reaction from MAGA, particularly Fox News, because they're collectively shitting their pants over this. But we're going to deal with that. We're going to deal with the Schadenfreude separately. First and foremost, we need to talk about the disaster itself in relatively sober terms. So NBC News reports the U.S. job market was weak in July, and previous months were worse than thought. Sharp revisions of government data show the U.S. created just 33,000 jobs total in May and June. Not in May and June separately, together, while July's number came in soft too. The U.S. job market is looking far weaker than it did just a few weeks ago. The U.S. added just 73,000 new jobs, in July, the Bureau of Labor Statistics reported Friday, and deep revisions to the previous 2 months now indicate that the job market is considerably worse than previously thought. The unemployment rate in July was unchanged at 4.2%, but more people left the labor force, according to the report. Payrolls have now just averaged $35,000 over the last 3 months, the weakest job pace of growth since the onset of the pandemic in 2020. Jobs reports always contain revisions to previous months' reports, with sizable revisions rare but not entirely uncommon. Last August, under the Biden administration, the Bureau of Labor Statistics said 18,000 fewer jobs had been created over a 12-month period than initially thought. Not only was this a much weaker than forecast payrolls number, the monster downward revisions to the past 2 months inflicts a major blow to the picture of labor market robustness, said Seema Shah, chief strategist with Principal Asset Management. Quote, what's more concerning is that the negative impact of tariffs only just starting to be felt. The coming months are likely to see even clearer evidence of a labor market slowdown. The report comes as Donald Trump's aggressive tariff policies are set to begin taking effect for many U.S. trading partners, a move that he has touted as a boost for U.S. labor, but criticized by many experts as a tax on consumers. Major U.S. stock indices dropped sharply in early Friday trading, with the Dow losing more than 700 points, while the Nasdaq fell more than 2%. The broader S&P was down about 1.7%, while yields on 10-year and 30-year U.S. bonds dropped, indicating a move by investors to safer assets. And we'll probably talk about the stock market performance in a subsequent video. The report comes a day after Trump unveiled a sweeping new set of tariffs. Analysts have calculated that the average effective tariff rate imposed on all goods being imported into the U.S. is now 15%, the highest level since the 1930s. Big change. While previous job reports gave the impression that hiring remained stable, Friday's revised figures showed that hiring actually slowed significantly this summer. Oof. Wow. Look at this. So this was the report in July. Not for July, but in July. This is the report we got in July. So it went up till June, right? Then you look at it. Ooh. Wow. See, the revised report going from 144,000 new jobs in May and 147,000 new jobs in June to 19,000 in May and 14,000 in June. Despite uncertainty around tariffs in recent months, the U.S. economy had been largely seen as resilient, thanks in large part to jobs reports that appeared to show a strong rate of job creation. That narrative shifted suddenly on Friday, thanks in part to revisions to the June and May reports. Revisions to job reports are not uncommon and updated to reflect fuller data from state records. But the changes combined with July's weak report offer a starkly different overall picture of the U.S. economy, which only added 19,000 jobs in May and June, rather than the 291,000 jobs the reports had initially found. Most of the gains had been in healthcare, and without those, the last 3 months of job gains would have shown a net job loss in each of the last 3 months. So that's a huge one, okay? But for these two sectors, or rather in the healthcare, I guess one major sector, we would have seen net job loss 3 months in a row under Trump. Friday's job report will only increase already considerable attention on the Federal Reserve and its economy influencing interest rates. Earlier this week, the Fed voted to keep interest rates steady, in part due to what Fed Chair Jerome Powell described as a solid jobs market. That pushed the odds of the next rate cut, something intensely desired by Trump, back to at least October. But following the release of Friday's jobs report, the odds of September cut surged from about 40% to 80%. The U.S. dollar index, which measures the dollar's strength against other currencies, also plunged more than 1% on the report. A falling dollar makes it more expensive to import goods from overseas and raises the cost to Americans traveling abroad. Two Trump-appointed members of the rate-setting committee who dissented from the Fed's decision both released statements Friday before the report's release, flagging the weakening labor market as a good reason to cut rates. Board Governor Christopher Waller said the job growth was operating at, quote, near stall speed, with other data suggesting further risks to the labor market had increased. Quote, with underlying inflation near target and the upside risk to inflation limited, we should not wait until the labor market deteriorates before we cut the policy rate, he wrote. Governor Michelle Bowman said the labor market is showing, quote, increasing signs of fragility, with job gains, quote, centered in an unusually narrow set of industries that are less affected by the business cycle, including healthcare and social services. Yet there are also signs that the price growth is accelerating, something analysts say puts the Fed, which is charged with keeping both unemployment and inflation low, in an increasingly difficult position because inflation under Trump has risen. As we've discussed, that is an objective fact. So once again, Trump's policies, terrible policies, are putting the Fed in a precarious position because they have two major things to balance, unemployment and inflation. Trump is increasing both of these things. He's increasing unemployment and increasing inflation. Quote, a turbulent week in markets and the economy is coming to a close with inflation moving higher while economic and payroll growth are moving lower, said Daniel Horn, a senior fellow at MIT and former deputy director of the National Economic Council. Quote, it's a precarious position for the Fed and the economy, largely the result of the administration's stagflationary tariff policies, which are set to move even higher at the beginning of next week. Prior to the report, Trump called on the Fed's rate-setting board, which is largely composed of Biden appointees, to, quote, assume control if Powell continued to keep borrowing costs elevated. After the report, Trump called Powell a disaster. Let's take a look at that. Too little, too late. Jerome Powell is a disaster. Drop the rate. The good news is that tariffs are bringing billions of dollars into the U.S. So here you have Donald Trump totally sidestepping his disastrous July jobs report and the downward revisions over the past several months. Just stunning stuff. Historically, this kind of labor market weakness would tend to suggest interest rates should be lowered, yet many analysts say the blame for the weakness itself lies with Trump and the uncertainty his policies have generated. Earlier this week, Trump administration officials sought to claim credit for a higher GDP figure that analysts say was largely determined by one-off factors, inadvertently confirming the notion that Trump is responsible for the current climate. Quote, "The Trump economy has officially arrived," said Commerce Secretary Howard Lutnick on Wednesday, 2 days ago. So, there you have it. They're finally admitting, it's been his economy since he took office because that's the standard Trump and MAGA set for everybody. Hey, once you take office, it's on you. Well, by that standard, it's been Trump's economy since 12:01 p.m. on January 20th, 2025. But they tried to downplay, all the bad stuff is Biden, all the good stuff is us, so we really can't say it's our economy yet, except, again, the good stuff, which is all us. Then they finally said, you know what, we're ready. 6 months later, we're ready. It's officially our economy. 2 days after that, we get this disastrous report. Just stupidity from the Trump administration, objective stupidity. Heather Long, an economic reporter for the Washington Post, a weak jobs report. The U.S. economy added only 73,000 jobs in July. That's way below expectations. May and June revised down by 258,000. 75% of the July job gains came from healthcare. The unemployment rate ticked back up to 4.2%. Wages grew 3.9% in the past year versus 2.7% inflation. This is a game-changer jobs report. The labor market now looks a lot weaker than expected. July job gains were a mere 73,000. June was just 14,000. May just 19,000. 75% of the jobs in July came from healthcare. This puts a September rate cut from the Fed back on the table. Again, she says the labor market is in trouble. Healthcare are social assistance are pretty much the only sectors hiring. This is not healthy. Healthcare added 55,000 jobs, social assistance 18,000, retail 16,000, finance 15,000, hospitality 15,000, state government 5,000. Hospitality 5,000. I don't know if it said 15,000. State government 5,000, transportation warehouse 4,000, construction 2,000. Professional business services lost 14,000 jobs, federal government down 12,000 jobs. Manufacturing down 11,000. I thought the tariffs in part were supposed to bring back manufacturing. We're hemorrhaging manufacturing, which, by the way, happened under Trump's first term, I might add. So deja vu, passes prologue. Local government down 3,000, information down 2,000. I've been calling it a frozen job market for a while. Now I would call it a red flag. The economy is barely adding any jobs. Healthcare makes up almost all of the jobs added in the past 3 months. Many sectors have lost jobs in the past 3 months. The big preliminary annual revision coming out on September 9th may even show job losses. Companies do not want to hire or invest with this much uncertainty about tariffs and inflation. A 253,000 downward revision to payroll employment is the largest since at least 1979, other than April 2000. So once you think about that. So it is in the past, 46 years, with the exception of April 2020, the worst jobs report or the worst jobs trends we've seen on Trump's watch. Stunning. And again, these headlines, Newswire, U.S. economy added 73,000 jobs, red flag. And then it followed up with May revised down by minus 125,000 from 144,000 to 19,000. June revised down by 133,000 from 147,000 to 14,000. Just these headlines are brutal. 26,000 U.S. manufacturing jobs lost in May and June, and 11,000 in July. Democrats are noting under Trump's leadership, America has seen the weakest 3-month period of job growth since the pandemic drove mass layoffs in 2020, and again, before that, since 1979. Midas Touch, Liberal Network, hammering Lutnick on this when he's like, it's the Trump economy. 2 days ago, the Trump economy has officially arrived. Today, the economy shows the weakest job growth over a 3-month period since the Great Recession. That didn't age well. Because Howard Lutnick, Commerce Secretary, is like, where are the experts now? That didn't age well. And if you look at it, this is trending all over the place. So, folks, this is really important. Again, we're going to discuss the MAGA reaction to this because it's hilarious. But the serious stuff we need to get out of the way. This is an economic disaster. It was largely predictable, and it is 100% the fault of Donald Trump. Don't assume people will draw those connections. You and I and everyone we know need to be sharing this, putting this out here, and making sure people put the blame squarely where it belongs. Not liberals, not Barack Obama, it's Donald Trump. It is objectively his fault, and he and his party should suffer brutal political consequences in the midterms elections in 2026 as a consequence of this. In the meantime, let me know what you think in the comments.